Ladies and gentlemen, good day and welcome to Paradeep Phosphates Ltd Q2 and H1 FY26 earnings conference call hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Manish Mahawar from Antique Stock Broking. Thank you, and over to you, sir.
Thanks, Yusuf. Hello, everyone. I am pleased to host today's earnings call of Paradeep Phosphates. We have leadership team represented by Mr. Rajiv Nambiar, CEO, Mr. Harshdeep Singh, Chief Commercial Officer, Mr. Vijay Kumar Biswal, CFO, Mr. Alok Saxena, Head Corporate Finance and IR, Mr. Susnato Lahiri, Joint GM Strategy, IR and ENG on the call. Without any delay, I would like to hand over the call to Mr. Nambiar for opening comments, post which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Manish. Am I audible properly?
Yes, sir, you are audible.
Okay. Good afternoon, everyone, and welcome to Paradeep Phosphates earnings call for the second quarter and first half of FY26. I appreciate your time and interest in our company. I trust you have seen our earnings presentations and press release, which have been circulated and are now available on website and stock exchange. Giving an overview of the quarter as well as the H1, Q2 and H1 26 have been strong and defining periods for PPL, underscoring the strength of our operations, the execution of strategy, and our readiness for the next phase of growth. This quarter, we not only delivered a robust financial and operating performance, but also took a transformational step towards the completion of the merger of Mangalore Chemical and Fertilizers with ourselves. This integration positions PPL as a truly pan-India fertilizer company, broadening our southern market presence, strengthening customer access, and the unlocking synergies in procurement, logistics, and product mix. Coming to the performance highlights, our Q2 operational performance was robust. Production rose 19% year-on-year to 10.06 lakh tons, and the sales volume grew by 30% to 13.55 lakh tons. Growth was broad-based, led by value-added NPK grades. Notably, N20 volumes grew by 52% and TSP 339% year-on-year. For the first half, production and sales reached 1.86 million and 2.3 million tons respectively, up by 17% and 28%. Financially, the company continued to demonstrate scale leverage and margin discipline. Revenue from operations in Q2 rose 49% year-on-year to 6,872 crores. EBITDA grew by 32% to 698 crores with a margin of 10.1%, and PAT improved by 34% to 342 crores. For the first half, revenue grew by 46%, EBITDA by 69%, and PAT by 135% YOY, a reflection of both volume growth and mix enrichment. We also sustained a strong financial foundation. Our cash conversion cycle improved by 30 days, coming to 58 days now, and net debt to equity stood at 0.66, maintaining ample balance sheet flexibility to fund future growth. Strategic progress. A key highlight in this quarter was the announcement of a 3,600 crore investment program, which marks the next chapter of PPL's growth. This program will add 1 million ton of new granulation capacity at our Paradeep site, expanded backward integration of phosphoric acid by 0.5 million ton, and sulfuric acid by 1.5 million ton across Paradeep as well as Mangalore site, which will make all the three sites to fully backward integrated. These projects will elevate PPL total capacity to almost 5 million ton over the next 2.5 years, positioning us as India's largest fully integrated private sector fertilizer manufacturer. This strategic investment exemplifies our focus on self-reliance, cost competitiveness, and long-term value creation, funded through a disciplined balance of internal accruals and long-term debt. Coming to brand and market leadership, on the brand front, we are privileged to welcome our ace cricketer Rahul Dravid as a PPL's brand ambassador. Rahul's values, trust, consistency and integrity mirrors PPL's ethos and our relationship with the Indian farming community. His association will amplify our efforts in promoting innovative and sustainable farming solutions under our Jai Kisan Navaratna and Jai Kisan Mangala brands. Through our expanded distribution and digital outreach, we now engage with more than 10 million farmers across 18 states, supported by 75,000 retailers, 6,000 dealers, and a strong on-ground advisory network. Coming to the outlook, looking ahead, we remain optimistic about fertilizer demand, supported by a favorable Rabi season, continued government trust on soil health, and rising shift towards balanced and specialized nutrient application. Our strategic priorities are pretty clear: scale efficiency, deepen backward integration, accelerate product innovation, and embed sustainability at the core of our operations. We continue to advance our ESG journey with our fourth ESG report now published and externally assured by TUV India. Our S&P Corporate Sustainability Assessment score continues to place PPL among the top 2% of chemical companies globally, reaffirming our leadership in sustainable business practices. In summary, Q2 and H1 FY26 demonstrates PPL's operational resilience, financial strength, and the strategic momentum we are building on. With MCFL integration complete, capacity expansion underway, a strong market fundamentals, and building a larger, stronger, and more future-ready PPL. It is positioned to create enduring value for our shareholders and for India's farming community. Thanking everyone for the continued support. I now open the floor for questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Prashant Biyani from Elara Capital. Please go ahead.
Yeah, thank you for the opportunity. Sir, it is heartening to see what our market cap was 3 years back when we listed. We are investing almost similar amount today in capacity expansion. Surely we have come a long way in a short period of time. My first question is, if you can share the year-wise split of capex of 3,600 crore, that would be helpful. Am I audible?
Yeah. So this investment will be made over a period of 2.5 years. So every year, we'll have around, this 1,500 crore of investment. So in 2.5 years, this 3,600 crore will be invested. So by the end of, financial year 28, the full capacity, whatever we are envisaging that, increase, that will be commercially, starting production.
So for remaining period of 26, how much should we take as investment towards these capex?
No, it will be around to the tune of around 500 crore.
Okay, and 27, 1,500, and then another 1,500 in 28.
Yes, perfect.
Okay. And sir, secondly, can you also share PPL's standalone performance, how it was in Q2? That will be great.
No, generally the post-merger activities, which is the appointed date 1/4/24, we are, supposed to, consolidate the account. So the account has been consolidated as per the Indian accounting standard mandated, and, this result reflect, the consolidated account with MCFL, erstwhile MCFL. So it is, we have not prepared or we are not supposed to prepare, on a standalone basis.
Sure. That's it from my side, and all the best for a flawless execution.
Thank you.
Thank you. Next question is from the line of Animesh Valechani from Namo Trader. Please go ahead. Animesh, your line is unmuted. Please go ahead with your question. As there is no response from the current questioner, we'll move on to the next question. But before we go on to the next question, a reminder to the participants: to ask a question, you may press star and one. Next question is from the line of Riju from Antique Stock Broking. Please go ahead.
Hello. Hi, sir. Congrats on a great set of numbers. So my question regarding the capacity addition that we've announced. So, at the Paradeep site, we have stated that we'll be doing additional 0.25 MMTP of phosphoric acid. So, this is including what we have announced earlier or exclude of that capex?
Yes, this will be exclude of the last capex actually. Currently, we are at 0.5, and we are increasing it by 0.2, which is expected to come in stream next year. And this is going to be beyond that.
Okay. So total at the Paradeep site will be roughly around 0.95 million or maybe a million metric ton capacity.
Yeah, absolutely.
For
Yeah.
we have it, right?
Right. Yeah.
Okay.
Right, yeah.
Understood. Yeah. And second, in terms of, we have stated that the capacity will take roughly around 2.5 years. And so 2.5 years it will take. But in the PPT, we have mentioned that the flow into the numbers should come from FY28. But as per the calculation, I think the numbers should come from the H1 of H2 of FY28. Is that correct assumption?
Yes. Yes.
And in terms of the
other. Yeah, go ahead.
Yeah. And in terms of the other aspects, so if I look at your current granulation capacity, so the volume growth will not be there maybe in FY27. So can we expect the granulation capacity might come a bit early, or maybe the capex that we have announced for roughly 3,600 crores, so that will be in a phased manner, or maybe it will come at a one go. So it could clarify that thing.
The capacity addition of 1 million will come at one go. And to answer your earlier question, that there won't be any capacity addition, but there will be incremental capacity addition by way of brownfield expansion, which is ongoing in the granulation trains at all the three locations. So we expect at least 0.2 million to come for the next year.
Yeah. So that you have indicated earlier, right? So 2 lakh ton kind of a capacity by debottlenecking you have will go online from next year onwards, right?
Yeah.
And sir, in terms of the subsidy receivables, if you could indicate the number for this quarter.
The subsidy receivable as on 30th September is around 3,275 crores.
And how much is due out of this?
No, out of this, around 1,000 crore is due, and 2,200 crores on account of the pause, which is happened in this subsequent months.
Okay, understood. And sir, if you could, bookkeeping question, if you could answer that, how much is the closing inventory we have at the dealer or retailer level, and out of which how much will be the manufactured volume for DAP and NPK?
Yeah. So, in terms of the trade stocks that we currently having, we are having approximately 2 months inventory, approximately around 8 lakh metric ton, including the urea and other products. And we've got a big consumption season in November and December, and this will go up for farmer consumptions in the immediate next 2 months.
Understood. And sir, in terms of DAP availability in the domestic market, so how is that for the Rabi season?
So I think I mean, approximately the country stocks are around 2 million tons. So it's a fairly kind of good availability which is there. It's a combination of DAP, TSP, and NPK. The availability is pretty decent this year.
So 2 NTPA stock we have only for DAP, is that correct?
No, this is not our stock. I'm talking of the industry stock.
Yes,
What you're talking.
for the industry,
Yeah.
for the industry, DAP is 2 million metric ton, right?
Yeah.
And sir, last
Yeah.
year, how much was the number?
Last year was a lower availability compared to this number. Approximately, I think maybe around 12 or 13 lakh metric ton, approximately.
Okay, understood. Thank you, sir. Thanks for answering all my questions.
Thank you.
Thank you. Next question is from the line of Gagan Thareja from Grow Mutual Fund. Please go ahead.
Yeah, good evening, sir. I hope I'm audible.
Yes, please go ahead.
Yeah. So the first question is on the funding of this CapEx of 3,600 crore. How much incremental debt will you require for this? And what could then the peak leverage be?
The project, this 3,600 crores will be financed 30% equity and 70% debt. So we have the headroom to have that,
Okay. And the granulation capacity of 3.9 million tons, currently, what is the utilization of that?
Yes, 100% utilized.
Okay. So you are 100% utilized, and next year you might have an incremental 0.2 million tons from brownfield. By when will that be commissioned?
Yeah, Gagan, for the purpose of modeling and all, FY26 we are almost close to 10%, utilized in terms of capacity utilization. Next year, we will have some sort of a backward integration coming through in terms of phosphoric acid of 200,000 tons and sulfuric acid of 100,000 tons at the Mangalore site. So this should incrementally give us about close to 350 crores of EBITDA in FY27. And FY28 is when the entire capex plan of 3,600 crores will get fructified in terms of the granulation and concomitant backward integration.
But if I look at, if I look at the commissioning time period, it is 2.5 years out, which means it will get commissioned in FY29 and not FY28. Am I wrong there?
No, we are actually contemplating to kind of start the operations by the end of FY28. So we might kind of get to realize some cash flows in FY20 itself. But you're correct. The fully realizable cash flows will come through in FY29.
So in FY28, then from a volume perspective, how would you address the volume growth requirements if there are any?
Yeah. So the way we look at it is, our kind of target number, what we are gearing up for is around 5 million tons. And we are looking at trading opportunities to augment the volume. So that's how we look at the overall basket. But the whole kind of distribution network and the market network that we have put up, so we have now geared up for a 5 million metric ton plan. And that's in line with our growth plan for the capacity expansion.
Okay. My question was that is it reasonable to assume that between 27 and 28, in terms of manufacturing, your volumes are capped because you are at more or less.
Yeah, you're right. That's a part of the growth cycle. That's a normal thing, and we will try to look at opportunity because the market is ready for doing trading basically. Okay, so we're already doing good trading volumes of DAP and TSP and NPK, and we will be doing that.
Okay, right. Thanks. Thank you. I'll get back in the queue. Thank you.
Thank you. Next question is from the line of Kishan Parwani from JM Financial. Please go ahead.
Yes. Hi, sir. Thank you for taking my questions. A couple from my side. Firstly, I think I missed your expectation for manufactured sales volume for F26 and F27. Can you please help me with that?
Can you repeat the question?
Sure. So what is your expectation of manufactured sales volume for FY26 and FY27? I'm sorry if you have already indicated that. Yeah.
The FY26, we at the halfway through addition, we already at we'll just give you the number just a second in terms of production.
Sure.
Actual numbers are 23.1 lakh metric ton.
So we were already at 23 lakh metric ton. So by H2, in fact, you can assume a similar numbers, and that should continue through FY27 as well. Just that in FY27 we might also do a bottlenecking of the existing facility and improve the granulation capacity by another 100,000 or maybe 150,000 tons.
Okay. So the total capacity. So the total granulation Sorry. Go ahead, sir.
Yeah. Please go ahead. You go ahead.
So I was referring to the presentation. So let's say your total granulation capacity currently is 3.9, and given I think Sushnata, you mentioned your first half was 0.23. So if I get the 100.23, it becomes 2.3. So then it becomes 4.6. So on a 3.9, you're saying you are producing 4.6. Is that correct?
So just to kind of give an overview of this thing, see the outlook for the whole year that we're talking of. We're talking of a volume of around 40 lakh to 42 lakh metric ton. Okay. Out of which around 3.7 to lakh metric ton will come from the manufacturing capacity, and around 5 lakh tons will come from the traded volumes. Okay. That's for the current year is concerned. So that's how we're looking at it.
Okay. So 4.6, 4.7 is the total sales
4.2. 4.2 to 4.3 is the total volume that we're looking at. We have done 23 lakh metric tons. We plan to do another 2 million tons. So that is around 43 lakh metric tons.
Sure. Got it. And what will be your maintenance capex, let's say for F27 and F28, over and above the incremental capacity expansion? You will need some maintenance capex. So what will be that number?
This is typically around 200 to 300 crores.
Okay. So it's fair to assume like a 1,800, 1,900 crores kind of a capex under for F27 and 28.
Yeah. Right.
Okay. Got it. And let's say, what's your EBITDA per ton target for the Concall entity for F26 and 27?
See, as an industry average, 4,500 to 5,000, that is, maintainable. And, we will have it that.
Okay. And so after this, let's say, full backward integration, right, becoming all the three sites becoming self-reliant, where do you expect it to move to? From 4.5 to 5.5, where do you expect it to move to?
Yeah, another 1,000 rupees will be added.
Okay, so 5.5 to 6.5 is that will be the range after that.
Yes,
okay.
Yes.
Yeah, and just a last bit, a clarification. I understand that you are consolidating full financials now, but what was the sales volume of the Mangalore plant given the amalgamation happened in October, that is post the second quarter end?
4.23 lakhs.
Yeah. For the H1.
For the H1, it is 4.2 lakh.
4.2 lakh for Mangalore plant?
Yeah.
Okay. Thank you so much for patiently answering my question. Wish you all the best for the upcoming capex. Yeah.
Thank you.
Thank you. Participants, to join the question queue, you may press star and 1. Next question is from the line of Saumil Shah from Paras Investments. Please proceed.
Yeah, hi. Good evening, management. So my question is on this 3,600 crore capex. So this capex, what we are doing, so what will be our asset turn on that capex? Hello?
Yes, sir, you are audible. Yes, you are audible.
No, it will be around 2 to 2.5 times.
2 to 2.5 times. And by when you think that we can reach the peak capacity in this plant?
No, this will take, gradually, maybe within a year of the commissioning.
So the commissioning you said is somewhere in 2028, right?
Yes.
Okay. So the revenues will itself start from 28 and then peak capacity will be in 2029.
Yes. Yes.
Is my
You are
understanding
correct.
correct?
Yeah.
Okay. Okay. And so for the current quarter, our EBITDA margin has gone down. The previous quarter it was around 13%, and now it has gone to 10%. So any particular reason for that?
So we don't look at So you have to see as a, on a, half yearly basis. So the price and everything, average it out.
Yeah. So, in our industry, which is subject to kind of, a lot of macro volatilities, primarily because of the raw materials being imported from various parts of the world. So, we go through various commodity cycles, price cycles, and you have to look at it, in a block actually. So I think the average we are doing fairly good actually. And as guided previously, we try to kind of, do around 5,000 number by the end of the year.
Okay. And what was it currently for this quarter?
No, I think this quarter was close to about 5,200 rupees per ton.
5,200, yeah. This quarter is 5,200.
Okay. And for the remaining half, post the merger of Mangalore, so can we increase this 5,200?
Yeah. So, given this investment plan that we have of 3,600 crores, which is to kind of set up the greenfield granulation and also kind of do a concomitant backward integration. So if you analyze it, the backward integration that we are undertaking, that of 0.5 million tons of phosphoric acid, that will be more than adequate to kind of address this incremental 1 million ton of greenfield. So the remaining will be serving the other two sites which are not backward integrated that way. So essentially, this backward integration will definitely give a fillip to the EBITDA per ton margin, which in fact was guided 1,000 rupees in incremental.
Okay, and that will be post FY28.
That's correct. But, FY27 also, with 3 quarters back, we announced 200,000 tons of phosphoric acid capacity from the current 500,000 tons. So that will actually incrementally come in FY27. Plus, there is a granulation capacity that will come in FY27 to the tune of 100,000 tons. Plus a sulfuric acid, capacity of 100,000 tons at the Mangalore site. So these three put together should also incrementally add to the bottom line in FY27.
Okay. So to the previous participant, I think you said something like 350 crores EBITDA in FY27. So it is because of that? That will be additional 350 crores?
That's correct.
Yeah. Okay. That's it from my side. Thank you and all the best.
Thank you.
Thank you. Next question is from the line of Tanya Kothari from AUM Capital Market Private Limited. Please proceed.
Yeah, congratulations to the management team on the strong quarter and the smooth merger closure. Just a couple of questions from my side, sir. So, with the new integrated granulation unit at Paradeep and acid complex, which will get, how much do you think your import dependence will be reduced in that coming year? And what would be the incremental margins or EBITDA per ton which you see in the next 2 years post-commissioning?
Yeah, ma'am, as we already mentioned, the incremental margin improvement will be to the tune of 1,000 rupees per ton, 1,000 to 1,500 rupees per ton. And in terms of percentage backward integration, with all the capacities being live by end of FY28, will be 100% backward integrated for all the 3 sites put together. And that's the target that we're actually racing towards.
Okay, sir. So what is the timeline for issuing PPL shares to the NCF shareholders and clearing the share capital suspense account, which is actually given in the notes?
Yeah, I think.
So the record date is already announced, which is 30th of October. We are doing some secretarial proceedings, I think, which should happen in next 30 days. So within next 30 days, we expect to allot MCFL shareholders the requisite shares in PPL.
Yes, sir. Sir, I could see the dividend payout of 100 crores in H1. Is it very conservative given the integration phase? Will the management continue with a low payout till major CapEx stabilizes in future?
Sorry?
Ma'am, we didn't follow the question. Can you just repeat it?
Sir, I just saw the dividend payout of 100 crores in H1. Is it in a conservative basis? Will the management continue with a low payout till the major CapEx plan is completed?
No, this, whatever dividend was paid, that was for the year 24-25, which is now up to the AGM and paid. So the, dividend for the next year, that will be, the decision will be taken in after this, finalization of 25-26 account. So this, dividend what you are referring, that is for 24-25.
Okay, sir. So out of 471 crores of CapEx in H1, how much relates to the newly announced integrated granulation and acid plants versus regular maintenance?
Actually, the new announcement the capex will come mostly for the cycles only. The last quarter, we have actually commissioned our sulfuric acid plant of 1,500 tons per day, almost 500,000 tons. So partly it has come in that.
Okay, sir. Thank you so much. That's all from my side.
Thank you. Participants, if you wish to join the question queue, you may press star and 1. Next question is from the line of Sandeep Mukherjee from SKP Securities Limited. Please proceed.
Yes, sir. Thanks for taking my question. Sir, my question was what is the split between TSP, DAP and MOP volumes for Q2, trading volumes, I guess?
Yeah. So, as far as Q2 is concerned, the TSP volume that we did was 1.6 lakh metric ton. So, there was last year volume of 0.6 lakh metric ton. So that was a growth of 158%.
And for DAP, MOP? DAP
yeah. So MOP and DAP, overall, if you look at the trading portfolio, okay, for H1, what we have done in trading portfolio, for TSP, we have done, just give me a minute, for H1, we have achieved totally 1.63 lakh metric ton, MOP is around 0.7 lakh metric ton, and imported DAP is approximately another around 1 lakh metric ton. So, sorry, no, this is for H1. And the guidance for the whole year is total we will be doing close to 5.5 to 6 lakh metric ton. That's the guidance for the whole year, the entire trading portfolio. Okay. Out of which 3 lakh ton would be TSP, 2 lakh plus ton will be DAP, and the rest will be MOP.
Understood. And what is our trading means EBITDA per ton here? Or EBITDA?
See, in case of trading, we don't have a separate this thing. That's guided by the government scheme, where they have given a kind of committed of 4% of the this thing of the MRP. That's what the government commits on that one, on the traded volume.
Sir, is this for the whole portfolio, 4%?
This is for the DAP, TSP primarily. MOP, we guided by a normal trading contribution of around 8 to 10%.
Right, sir. Okay, sir. Understood. Thank you, sir.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1. Next question is from the line of Mr. Manish Mahawar from Antique Stock Broking. Please go ahead.
Yes, sir. Just in terms of this NDA rate announcement, it must happen the last week. What's your view and how do you see the H2 EBITDA per ton or margins for a company or in the industry side?
The NBS impact, mainly this is on P, on phosphoric acid, not on ammonia or, K. So, hello?
Good, sir.
Hello?
Yeah, so how do you see the margin? Yeah, I can, sir.
Yeah, margin, there will be not much impact on the margin because the raw material prices increases, so it will be almost, sort of squared off.
Okay. And have you taken any price hike, sir, in the market? MRP I'm talking about.
Yeah. So we've already taken a price increase for the NPKs. Okay. And we leaders in the market as far as the price realization for the market is concerned.
Oh. And can it possible to share the number, price hike?
Yeah. So for like NPK 10-26-26, our MRP is 2025. Okay. Earlier it used to be 1,900 rupees a bag. Okay. So we took a price increase of 2,500 rupees for the Rabi season. And same thing is for 12-32-60. And one of our flagship grades, 1919, that is at 2,175 rupees a bag.
Okay. Understood. Okay.
Yeah.
And in terms of during the quarter, have you booked any amount or maybe subsidy related to this NVS notifications on a channel inventory?
Sorry? Can you repeat?
Can you repeat? We couldn't hear.
Yeah. This NVS notification related, any subsidy we have booked during the 2Q in the quarter?
Yeah, the cost of what we had on that, the incremental, the increase in the subsidy is at tune of around 40 to 50 crores has been accounted for.
Okay, understood. And in terms of in the merger, right, MCFL with the PPL, I think we have talked about some synergy benefit, right? So could you share what could be the synergy benefit can come and which can flow to the numbers in the next year or maybe overall basis?
There was significant synergy benefit in terms of improving operational reliability, supply chain, the procurement contracts. And I think we'll not be able to quantify at the moment, but this will be a good number which you will see in next 12 to 24 months.
Okay. And in terms of this new capex, right, you alluded, I think, so debt to equity could be at 70% and the 30%, right? But that is the next debt number what you're talking about, 70%, right? It should be much lesser as in terms of
for the upcoming projects.
Yeah, upcoming projects. The 70-30 what you said, right? So this number will be much lesser as in terms of debt perspective, right? Because our internal accrual will be significantly higher in the next 2 years, which will basically required for our new capex.
So typically in long-term projects, your equity contribution is around 25%. So we have taken that 30%. The additional cash flows that will be available to the company will be used for other strategic initiatives and growth initiatives, which we will let you know in due course of time.
Okay, understood. Yes, that's from us and all the best.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1. Next follow-up question is from the line of Gagan Thareja from Grow Mutual Fund. Please go ahead.
Yeah, thanks for taking the follow-up. So you mentioned an incremental EBITDA of 350 crores from the backward integration next year. Additionally, something more from the MCFL synergies. But to a certain degree, that will be offset because incremental volumes partially will be traded volumes. So just want to understand, is the incremental EBITDA that you're talking of net of the impact on margins of the traded volumes?
Not quite, Gagan. So if you look at it this year, as has been guided, we'll be doing close to about 4.2, 4.3 million, out of which a good 10-15% will be traded. So the similar kind of a percentage share of traded will actually will be expected to happen in FY27 as well. And trading is actually over and above the manufacturing realizations that we cannot get. The backward integration will add to the manufacturing realizations. Trading will be over and above. So there's no netting there's no squaring business here.
No, the reason I ask is, that if you are constrained by, your manufacturing volumes, only having so much headroom till the time the new capacity comes in, will the sales mix not incrementally move in favor of traded volumes, and therefore will it not have a certain impact on margins?
So just to share with you, see, one directional change in volume mix that we are trying to do is going towards more value creating NPKs. Okay. So that's the shift that we are trying to drive in the portfolio volumes. Second, like what you rightfully said, we would look at augmenting our trading volumes as long as it creates value. So while we, from a market side, we are ready to augment the traded volumes, and we look at that opportunity. And while the manufacturing capacities come up, we will be looking to scale it up, especially TSP, which is a strategic portfolio that we're trying to kind of build in the Indian market. So that's what we'll be focusing on. The other focus products that we're trying to grow in the portfolio is N20. So we are among the top 2 players today in the country. So that's how we're looking at it. But yes, you're right. Till the time the full capacity expansion happens, so there will be a gap in that, but we will try to augment that volume through the traded volumes.
Okay. So what you're saying is that while you increase the traded volumes, within the manufactured volumes, you intend to shift to higher ASP or higher realization products.
Yes, absolutely. So that
will take care of the impact there.
Yes.
Right, sir. Right. And from an FY28 perspective, is there further room to increase capacity by debottlenecking in FY28 till the 1 million ton capacity comes through, or that is not possible?
Before that, actually, we should be able to augment it by 0.2 million. And I'm sure, actually, because this is the idea which always circles in the manufacturing facilities to go for brownfield expansion, smaller debottlenecks. So there will be many ideas which will come around. So beyond 28 also.
So you're saying 27 and 28 you will have some room to increase volumes from debottlenecking and then augment that with additional trading volumes, and then that 1 million. Okay.
Absolutely.
I understand. Right. Okay. Thank you. Thank you, sir. I'll get back in the queue. Thank you.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1. Ladies and gentlemen, as there are no further questions from the participants, I would now like to hand the conference over to the management for the closing comments.
Thank you everyone for taking the time to join our earning call. If you have any further questions, please reach out to our investor relations team. Thank you once again.
There are more than 20 parties in the conference.
Thank you.
Thank you. On behalf of Antique Stock Brokings, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.